Yeah, whoop. Oh, hey, there we go. Yeah, I got it. I figured it out. Man, I tell ya. Okay, mic check, mic check. YouTube side, can you hear me? I think I got both sides working now. Man, I tell you, when there's an update, and they just decide, hey, you know, this would be a perfect time to totally change all of your settings. Oh, thanks. I wasn't expecting that. I appreciate it. Okay, anyway, looks like we're rocking and rolling now. Jeez. Is it Monday today? Man, it feels like a Monday. Anyway, now that I know everything is working correctly this time around, good morning. Mic check. Hey, it works this time. Mic check, screen check. All right. Good morning. That's why I do it every morning. It's just normally I don't have to go through all the extra. Good morning, SSFTG family. I hope you all had a chance to rest up. You ready for the day ahead? All that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump on in today. If you're watching on the YouTube side of things, the stream does have between, like a 5 and 30 second delay, depending on where you're logging in from, and that will definitely impact the timeliness of what I may be talking about at any given moment. And then, of course, like we do every day, I want to take a second to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out if you're looking to further your trading education and career. The easiest way to start out is to join as a member on YouTube. It gets you in the chat room and a little more behind the scenes and what's going on. Or if you want more information on how we do everything with our trading approach and over 19 hours of video course material and a ton more stuff, check out the main page at ssftg.com. So whether you're here for the very first time or you're a VIP vet over on the dedicated stream, welcome. Glad to have you trading alongside of me this morning. Let's take a look at some markets, take a look at some news, see what's going on for today. See if we can find some wood to knock on and some some salt to throw over our shoulder this morning. Jeez, oh Pete. It's one of those days, I tell you. It's one of those days. Before we jump in, of course, don't forget to grab your morning DP levels as I posted for you this morning on the Major 7. NASDAQ, S&P, Gold, Crude Oil. Oh, jeez. See? See? I knew it. Hang on. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. Just need a couple slaps. It's the American way, right? Gets everything going. It's a race every time. Don't forget to grab those morning levels one way or another, though. As far as the news is concerned, we don't really have a whole lot going on so far. Even this morning, not really anything big at 8:30, nothing like that. The only big news, of course, it is Wednesday. We have crude inventories. The forecast for the inventories, let me zoom in a little bit here, is negative 3.544 million. Zooming in didn't really help a whole lot, but if we zoom a little further lower here, we can see that the API report came out at a negative 5.4. So it's actually kind of anticipated to be a little more bullish than expected. Remember, when they have a lot less than expected, what's likely to happen? Supply-demand. You have a lot less than you expect. You kick the price up so people slow down in buying it, right? Well, that's the anticipation here. So if the API is telling us that, well, they were expecting a negative 3.9, today they're expecting a negative 3.5. Yesterday came out at negative 5.4 actual, so probably going to come out at around negative 5 or so would be the anticipation. So crude oil is expected to be a little bit bullish, and, well, I mean, seeing what price is doing so far this morning definitely shows that to be the case. Let's take a look at some charts, though, and see what all is going on this morning. On the NASDAQ, first off, we've got a bit of a sideways consolidation, congestion, chop and slop. What a mess. The overall momentum that we've got going on here, I mean, really, it's so far detached now that we kind of have to start a new story. And a new story, realistically, if we just go off the highs here, we could have wave 1, wave 2. This one doesn't work. That one doesn't work. This comes way too far up, so that doesn't work. This one finally does work. So we've got wave 3, finally, wave 4, and wave 5 for the completion. Since then, not really much else has happened. And, even with that, maybe a double bottom, I guess, over here. So we're obviously in a sideways congestion, and a lot of that happened with the completion of the move down here. It happened very fast. But, I mean, since then, what's actually happened? New low into a new high into maybe a higher low? This is definitely sideways. We're consolidated, chopped, and slopped, and this is we got to play it a little bit cautious where we are at the moment. How's it going, Ace? Steven, welcome, welcome. Ladislav, Dave, good morning, welcome. Everybody else so far? We've got a lot of sideways action that's just kind of bumping around here around settlement, and it is demonstrating a monstrous amount of support coming in here. So, I mean, let's be real. This is something where if the bulls can start cracking above these inside highs or start getting some rotation, there's a really good shot that this thing, gets bumping. But for the time being, at least, we've got to be a little bit more realistic with what's going on, and this is still stuck in a sideways range. If we look at the volume, technically the top was up here, going all the way across. Jeez, what a mess. The volume's got to be down here now, right? Wow, okay, still no POC shift. Up at the 15, 6, 20, 75s. I thought for sure they were going to have it. Maybe we get it in a little bit. You can see there's a lot of volume creeping up. Nice scenario would be a POC shift as it's jerking around here. Nice pop-up, higher-low rotation. I mean, one thing is for sure, the bears still, at the very least, have falling resistance to hold the market down. We don't have proof yet. It's still early. So, be careful. POC still above 2. That's kind of shocking. As far as the S&P is concerned, again, we're dealing with a very wide perspective. And on the other workspace, we've got the S&P with more of a write-up on the 15-minute. So just generally speaking, it's very similar to what we're seeing on the NASDAQ. We're just grinding lower, new lows, new highs. We'll analyze this a little bit more when we switch workspaces, though. Over on gold, gold is diving back down pretty aggressively. Would be an understatement, actually. This thing is getting hammered off the top. They came back up, tested settlement, and just got slapped. Wow. This makes me a little bit concerned. That was a new low. Where's this POC? Oh, okay. Well, no, now hold on a minute. My data's bugged. Let me move this forward. Okay. So this is a valid attempt from the bulls. They broke a very major previous swing high. They broke above the volume cluster. They even held the pullback, and then a major lower high, and now breaking back below. This could be a very big problem for gold. Now, the fact that they've broken higher, remember, buyers are looking at this not like, oh, we're going to buy here, and oh no, we're going to exit because it went down a little bit. No, that's not how this works. We're talking about a POC shift. They're not invalid until it breaks the lows, okay? So to them, to buyers who are looking for the reversal, this is the area of opportunity. They're looking to buy anywhere in here. The better, the lower, the better. Looking for the reversal to the upside. If it breaks underneath the low, even by a little bit, that's demonstrating invalidation. That's what they would need to see for the bears to rotate this down. But this is not a good start. Let's go into crude over here. Hey, how's it going, Matt? Welcome, welcome. You should see a Pikachu here in a second. I think that should be still working, right? Welcome, welcome. Looking at the crude oil side of things, we've got just look at it, right? It's following through with exactly what we would expect it to do. The news is saying bullish, and it's bullish. Whoa. Weird. Now, in terms of the overall momentum that we've got going on here, the big thing that really stands out is that obviously the news is bullish. Everything's bullish, blah, blah, blah. But if we look at where the volume is, right, look at where we rolled off of from the lows to the highs. From an impulse perspective, where did the market pull back to? Right now my data's bugged, so I'm going to have to go forward. Hopefully it doesn't change things. Dang it changes things. I wish it didn't. My data's bugged, otherwise you'd be able to see, but it moved up just a little bit, and you can see where you've got that 69.73, but there is actually a new high in there, so this is not the only volume node. It's a little bit bugged, and if I draw it, recalculate it forward to the next day where I know it'll work, the POC's already shifted. Well, either way, the sellers tried to get it to go back down to that previous POC area, back lower. And again, from the perspective of where that's coming from, right? Look at where that POC is. That's right off the highs. So yeah, that could be bulls who are looking to take profit off the highs. That would very, very easily explain a majority of that volume. But from a range perspective, looking at what this thing's been doing, there's a lot of traders who will look at that from the sell side, thinking, hey, now's the time to go. This thing's going to fall apart. It looked really strong over here, and then it collapsed all the way down to the lows. It looks really strong here. It's going to collapse, right? Right? Going into the weekend, right? Oh, wait a minute. It didn't. And we start going higher. So this zone, even though it's not the POC anymore, becomes a major area of interest because that's where a lot of the shorts are stuck from. Now, we have moved the POC up to 70.47. So if you split the difference between the two, remember, a 50-50 average. If they bought one here and bought one here, their average would be in the middle. Notice where the market stopped? That's not a coincidence. We don't believe in coincidences here. That's not how that works. And in fact, I would even wager to guess that their average might have been a little bit higher given that wick back. Either way, that's their break even. They exited. They're gone. Those shorts are out. So it's no wonder this thing is rallying higher because who's going to hold it down anymore? I mean, really? So yeah, we're breaking above the POC and all that fun stuff. I don't want to buy way up here. That seems a little bit nuts. But if we get a little bit of a pullback, maybe back to the 70-50s or something even back in the 71s, could be interesting. Might not, though. Over on the euro, majority of price action just kind of sideways. From the top to the bottom as far as an impulse wave is concerned. Oh my god, NinjaTrader, you're driving me freaking crazy. My data's bugged. Luckily, it doesn't change much. We do have the impulse POC, which is rested at 18,470, and so far the market made an attempt to break above it, which has then failed, and now we're rolling back down. This is looking incredibly bearish. If we start losing settlement, we're likely going to see a rotation off the positive half DP down to a negative half, maybe even -1. That would be a dynamic 1.5 statistical move. I mean, it's not likely going to close down that far. But that is kind of the perspective right now if we start losing settlement. We're holding that POC to the downside. New lows would be the objective. The only thing that stands in their way, that stands out really obviously at least, would be wave 1, wave 2, wave 3, wave 4, wave 5 completion. So it doesn't necessarily have to go all the way back down. But generally speaking, we know that these complete themselves at the top of wave 4 or around wave 4, somewhere inside wave 4 if it was, happening maybe down here. Given that these happen so close together, at least, we know that this whole zone is going to be seen as a zone of resistance. And, well, I mean, obviously the market treated it as such. Couldn't even break above the previous high. And now that we're rolling back underneath this POC, I mean, there's one last trap that I could see that might be up the sleeve of the bulls, would be buying underneath this swing low, knowing that a ton of traders who are buying above this, because remember, we broke the POC, invalidation happens under the lows. So buyers will put their stops under here thinking that they're doing themselves a favor by reducing the risk, when in reality it ends up doing this. So a lot of traders' last-ditch effort, if they're looking for minimized risk, are going to be looking for that as a zone of support to buy into, because primarily their risk-reward is really, really nice. But that's a different kind of perspective, a little bit further out. So, interesting location that we've got going on here. Everything hinges on them losing these lows. Bulls, I think, still might have some tricks up their sleeves, though. Bitcoin rallying above the previous back and forth mess of a candle that happened back there on what I believe was a Walmart announcement, or a fake Walmart announcement, talking about Litecoin or something. That's not sus at all. Litecoin out of all of them. Not very Walmart-esque, if you ask me. Turned out to be false news, obviously, and then it dropped back down. But honestly, I think that fear flush was nothing more than a buyer's BTFD, because we've rolled all the way back up above the highs. So if they're going to maintain the support above this big back and forth flush point, then we should see this move double itself up. So take this distance and then double itself up, which puts it at about a positive 2DP, right back in about the 50Ks. Again, I'm still anticipating a larger fall, but this would make sense given what we're seeing right now. It doesn't matter what I would like to see. It matters what I am seeing, and at the moment, it's projecting potential double up movement. Especially with some of this trapping on the bottom. Wow, wow, wee, wow. That's really nice. Look at that. But shit's right at the base. I mean, we're just above the channel high, so incredibly early. I would much rather see like an L3, maybe. But it's there. Ethereum, again, Ethereum's in a different ballpark when they cracked all-time highs again. We've got a bit of consolidation, excuse me, a bit of consolidation, a little bit of a trap underneath the lows, but here again, we haven't broken above the major highs at 3,500. That's really what we need right now. That's the last previous confirmed swing, and until that happens, we don't have a confirmed uptrend. I would love for this to be an uptrend, and I think it has every reason to be, but technically speaking, we don't. All right. So the S&P, kind of coming back to what we were talking about there on the bigger perspective, we had that completion of the 5-wave movement to the upside, followed up with a 5-wave completion to the downside. Really sloppy. And yesterday we were talking about and trying to find locations for potential longs inside here. A few of them actually worked out pretty nicely. But when we've got these areas of interest that are stacking up, you can see how much of a fist fight there was. And, well, now they're losing ground. So the fact that they're losing ground here doesn't necessarily mean that the bulls have lost the fight. But, right, we've got to play both sides here. It doesn't matter if I want to be a bull and I want to see this thing go back up to the highs. The market takes those wants and crushes them under its feet, okay? What we have to be is realistic. And when I'm looking at this and I'm seeing the market breaking down, I'm thinking, ooh, this isn't great. But we have a completion of a 5-wave cycle to the downside. So, with a completion of a 5-wave move to the downside, does that mean that the market has to stop falling? Absolutely not. Wave 5 can be longer than wave 3. We've seen that before, which would be an incredible dive. But that said, we are breaking some serious bull structure here if we stay underneath the previous wave 4's low. Especially if they start breaking underneath the 420s. If we start cracking underneath the 420s, then that gives away kind of everything. That was their last hope. So, this is a pretty big zone here, where we are right now. Lots of wicks showing up on the bottom, but it feels like the bulls have lost a little bit of a fight here. Touchy ground, touchy ground. Looking at it a little bit closer on a 15-minute perspective, it doesn't really help a whole lot because this is just kind of sideways. But as far as the volume perspective is concerned, we've got the previous swings. The high was at 483.75. The next confirmed swing was up at 79.50. And that's kind of where we are right now. So from that confirmed swing high down to the impulse low at the very least, the bulls would need to rotate above 44.50 if they had any type of argument. So until that happens, the bears still own it. And even then, that's just a previous impulse POC. I mean, if we look back at the previous confirmed, that would put resistance just above it at 59.25. Golly, look at the volume here. What in the crap is this? Someone needs to dial the algo down a little bit. It's a bit too obvious, man. Jeez. Look how structured this is. That's ridiculous. Some algo's going crazy inside there. Extra zero, I don't know. Oh man, I thought I'd be I love trying new energy drinks. If you couldn't tell, this one keeps making me stumble. It tastes awful. I'm too Dutch to throw it away though. I'm way too cheap. It's the Bang Delish Strawberry Kiss. I was thinking like strawberry flavored water-esque type flavor. This thing is like strawberry cream soda punch you in the throat. Like, if that's your jam, you'll love it. But wow, that was not what I was expecting this early in the morning. Ooh, lordy. I do not like that flavor profile at all. Alright, let's see here. We've got the previous POC in kind of a zone of resistance, which is going to be back here. So until we crack that, we really don't have an argument. And actually, this cycle would have ended back here. My cat's going to start flipping my little... 1 second. I don't know why my cat does this, but every morning he jumps up on our little shelf behind me here, and my wife has a share of the share of Disney that we have, like, framed. Like I said, she collects Disney stuff. And he comes up and he just bounces it. Like, he doesn't knock it off. He just bounces it against the wall a couple times and then looks at me. He does it every day. And I don't know what he's trying to get me to do. Like, I know cats train their humans, right? Like, I know he's trying to train me to do something, and I'm too stupid of a cat to understand. Like, I don't get it. I don't know what you're trying to convey to me. I'm sorry, Ziggy. I am not cut out to be a cat. Hey, man, it's in my blood. I can't help it. You know those videos of, like, Michael Jackson talking about going to Salvation Army and stuff? That's me, man. Like, I'm not Michael Jackson by any means, but I'm certainly not the voice. But hey, Salvation Army? Oh man, you can pick up some really good stuff at Salvation Army. Some good flips in there, I tell you. For those of you who are entrepreneurial spirits. Someone donos a new pair of Jordans, doesn't know that they were doing it to revenge their kids or something like that. Find a $200-$300 pair of sneakers on the shelf, brand new, never worn. Oh baby, you'd be surprised the stuff you find. Flip that bad boy on eBay. Looking at the 5-minute on the S&P, we are opening, or going to be opening up with almost no gap. Very, very little gap. 44.37 quarter is the gap, and we're at 38.75. Looking at yesterday's structure to the downside, obviously there's a lot of bearish momentum. We haven't necessarily broken out of that per se, but I mean that little... What even is that? Is that a flag? Like, I don't even know what you would consider that. That's a mess is what that is. But I guess a little bit of a flag and maybe a breakout to the upside. I have to kind of wait and see, but we're not going to be opening up with a whole lot of gap, and yesterday had a pretty strong bear trend. Looking at the 2000 tick, the 2000 tick helps not at all. Super, super sideways. Got the market just kind of bouncing back and forth so far in the S&P, and there's not really a whole lot going on from a cycle perspective. For what it's worth, I guess the bears tried getting a cycle to the downside, it overextended to the bottom. They tried getting a bull cycle to the upside, which did finally complete. One leg, that's it. And then rotated straight back down to the lows, and one leg, that's it. We're probably going to see this want to rotate back up to the highs, at least structurally, based on what we're seeing. A little bit of a funky channel, though, huh? I am going to anchor it there, though, because obviously we've got that candle gapping right there. It fits. So, well. Hey, how's it going, Matthew? Welcome, welcome, my friend. Welcome to the family. Good to have you. I don't know if you saw it, but you should have got a Pikachu, I think, somewhere inside there. So watching the S&P, we've got a double top on the micro scale with bulls kind of failing, but realistically, from a structural perspective, it makes a lot more sense that they try to rally this up towards the highs. That would be the objective. From the 15-minute perspective, we know that we are in a sideways transitional phase, and at the moment, my concern is that this sideways phase, we've got an A to B to C move up, right? So a nice ABCD move up. Fell a little short, not perfect, definitely not perfect. Looks like a 618, good old fibs. And then rolled all the way down to the lows. So my concern here is that we've got a new high, then down to a new low. Is this just going to be this back and forth, first off, is this going to be a lower high continuation rolling type move? Or are we going to see this actually transition with a higher low and shift gears on everything? You know, so there's a lot of different things that can happen right here, and it's on the launching pad. If we look at the overall volume drawn further forward, totally developed, that's still up at 44.49.75. So, I mean, the bears still own it. I have to say that. I don't have a choice. Even though I would love to see this go back up to the highs. I think I legitimately need to invest in hander pants. My hands get so cold in the morning. My hands are always cold, though, to be fair. I've got such bad circulation, it's ridiculous. What's, NO2? Nitrous? not the gas. Hey, wait a minute now. The supplement that increases blood flow. I wonder if that would help. Where's my supplement, people? Come on now. Okay. well, that one increases the blood flow too, but that gets different jobs done. Got 30 seconds until the open right around the corner here. As far as the 5-minute is concerned, we are going to be opening up with a very small gap. Not a whole lot going on, but the gap settlement price is going to be about 2-3 points away. I mean, yesterday's bear trend is going to be the persistent thing going on here, and my concern is the overall momentum to the downside started right from the beginning of the day until the bottom. So the impulse POC is way up here at 49.75. See what they can do. 9:30 open hits. Halfway decent bullishness, but I mean, I've got to be relatively suspicious of these 44 quarters, especially given that previous resistance there. I mean, look at that. That's insane. It's a bit early, and it's a bit ahead of that zone. They've already gotten up to 43.50, so I would rather see if they can pulse the top a little bit, but I still like this as a zone of rejection. Looking at it from the 2,000 tickets fading against the range highs, which still fits, so that's totally viable. As far as the risk perspective goes, that's where things become a bit more difficult because they kind of left that last swing behind. So if you're going to be selling here, realistically, you've got to be able to accept risk all the way up above 56.50, potentially. And that might not fit a lot of risk rewards. Definitely more on the scalp side, that's for sure. Now it's backed off too far. They didn't quite rally up as far as I wanted them to go. Got the NASDAQ attempting to rotate back down. First candle of the day. Still has about 3 minutes left on the S&P. 44.41.75 is the POC at the moment. Technically, the bulls did complete their leg to the upside at that 43.50. So, it's seller's turn. This doesn't fit what they've been doing, though, right? This is kind of abnormal based on what we've seen so far. Not from what the volume is saying, though. Yikes. Bears pushing down pretty aggressively. The NASDAQ made like a 1-tick new high. What a vindictive thing that is. Jeez. Now, with this pulse to the downside on the NASDAQ, this is offering up potential reasoning to believe that sellers have, again, a little bit of a potential follow-through. Still maintaining the bear trend, and now we're starting to break down to new lows. So it definitely fits. At the moment on the NASDAQ, risk is very light. I'm not willing to put a whole lot on this. It's either going to go or it's not. Probability of success on a trade like this can't really ever be higher than probably 30 or so%. So realistically, going for a 3-to-1 is the only viable option here, which is why I'm trading it this way. Because if they fail here and it does go back to what they've been doing and goes V-bottom and holds support off the lows of the range, like we're seeing on the S&P, I don't want to be holding bags. No thanks. I would rather just take an incredibly small stop and accept the fact that I'm going to be wrong on this 7 times out of 10, but when I'm right those 3 times, it makes it worthwhile. And the trader's math works, so it's worth it to show up. S&P is continuing to slide to the downside. As far as the overall movement, we've got a POC shift to the downside and closed it. 44.35 quarter is the POC to start the day off. NASDAQ is getting close. The area of interest is at 392. Again, risk reward and probability would dictate that this has to be a 3-to-1. Otherwise, it's just not worth my time. Really, though, there's just too much stuff in here to be wanting to hold bags. You know how that English was supposed to work out. If the market starts reversing back up off the lows. POC down at the bottom on the S&P starting off at 44.34 quarter. The market's having a little bit of a hard time getting back through there. NASDAQ just can't seem to pull back to give me a fill, though. Yeah, I need everyone to go heave. Oh, I mean, this thing is seriously, like, if they start cracking the lows, this thing's an open, gigantic door. Having to sell way down here, though, you know, my first response, I would rather be on the option side. All right, no fill on the NASDAQ. Not for lack of trying, but... see if they want to give a pullback at some point. Sellers gaining a bit more conviction to the downside now on the NASDAQ, at least breaking through a lot of the structural support. We don't have that break on the S&P yet, so NASDAQ is a little bit of a unique scenario. S&P 1.5 minutes until this last candle, 44.34 quarter. No, I never did get a fill on crude. I had my limit order a little further away, and it didn't come back far enough for me. So I was unfortunately not part of this explosive party, and unfortunately, especially not by much, but it happens. Hey, never say never. Bears have strong continuation to the downside, but we're getting closer to the lows of support, and a lot of sellers are going to be looking to target out at this area if they're selling that first portion. Potential for bear candle gapping to start completing here and creating. 44.34 quarter is the POC. 35 quarter is the first 5-minute POC. The NASDAQ looking for a smaller retrace or corrective phase back up into the 378s mid to uppers for the continuation back to the downside. And very aggressively, we have a L1, L1, L1 sequence to the downside, so there's even a potential reason to believe a 2-to-1 scenario on the aggressive side. Although, obviously, you can see from the risk perspective, I would rather maintain a little bit of a different view. Oops. That's... Missed the entry on that one too. All right. Welcome to the markets. They're unfair every day. I'm sorry, I'll stop. We've got the potential support down here at 27.50, the next stop on the S&P continuation. See if sellers want to bunch up in this area and look for a continuation to the downside. Possible candle gapping still open on the S&P. Although we are again testing some of this previous pretty heavy support. Now this momentum to the downside, looking at what's going on here, this looked like a very valid attempt from the bulls with a real small trap on the top and a heavy rotation down. So if the sellers are going to take it, this is a valid area for an aggressive continuation, similar to what we saw over here, right? We've got this really strong dive to the downside, aggressive follow through, and then they can pull back a little bit deeper after that. That's kind of what I'm looking for here. Same mentality. But it's got to actually correct. More sell side continuation. That POC is getting real heavy down here. 44.29. All right. And then again, we have the aggressive continuers, but I'm not going to give that a whole lot of wiggle. That one's going to be a 2-to-1, the next one's a 3-to-1. Starting to close in a little bit of the gap. That's taking away a lot of the bear pressure on the S&P, at least. I'm sure eventually one of these times I'm going to get a fill. I can't click that box. There we go. The candle gap has been totally filled on the S&P, and a relatively strong bull bar to try to kick things off. We got close to my entry point and are fading off again, which means that once again on the NASDAQ I missed my opportunity on the aggressive side. Well, I'm still waiting for the bigger one. That one's still interesting up in the 364s, but this will be the third time today that our entry's been missed by a tick or two. Oh, joy. Nice strong bull bar to try to reverse the lows right off of the bottom of that structural support. What a shock. Who would have thought? Now, this is doing something that was a bit more in tune with what's been happening so far, in the sense that we had this original move up, down, oh, wait a minute. Now we've got something different. Something's changed. Right? This has done something that the market has not done before. We've got new lows and repetitive lower highs. They did hold that support really nice. Have a good one, Ace. Enjoy. Bottom weighted POC at 44.30 quarter. And a relatively strong bar 3 reversing off of the lows. We'll see what they can suggest to do next after that, but I'm willing to give one a bit of excess risk just because I know we're in a relatively big zone, but overall, if the NASDAQ can't start reversing to the downside off of this area, I'm not going to be holding bags. I love the way that it looks. S&P starting to climb aggressively higher now for a potential V bottom. Looking at the 2000 tick, we can really see that this is nothing more than just the range lows bouncing off the base. Whoa. It does look like a relatively nice two-legged corrective phase down, but it didn't quite meet the measured move to the tick. At least not perfect. It doesn't have to be. But POC on the 15-minute, 44.33.50. That's starting to look a little bit different here. I'm not willing to open the door anymore. It either works or I don't want it. there are a few yellow flags. There's not red flags. The red flags are happening on different markets, right? So I just call them yellow flags. They're caution. But there are definitely some things that are happening on the S&P that are suggesting that the NASDAQ may have a difficult time getting the short to work. We already know the short's only got a 30% probability of success, so it's not like that's a surprise, but... Sellers are attempting to get this zone going, and I think a lot of the sellers are approaching it the exact same way that I am, honestly. We've got the S&P, which is rallying higher. The NASDAQ's trying to push back against that, so there's some yellow flags. There's some caution. Speaking of which, now, if the S&P gets up into these 44 quarters, I'm going to be a little more interested. That would be a range cycle right off of the bottom to the top. Especially considering that we've only got about 50 seconds left on this candle. Initial pulse to the downside, 42 quarter to 43 quarter, but 45 quarter if they want to try to attempt to break above these highs. The next zone would be still looking for around about a scalp. Just so that I don't lose my place. Starting to pulse a little bit further up. Tested the target, didn't get a fill. Okay. There we go. Yeah, that's the thing, Steven. I'm on the same page as you. That's a huge frickin' candle. Like, I love it as a washout fade, so I'm still totally happy still being short. Like, that doesn't hurt my feelings at all. Let me cancel my NASDAQ orders. That trade was a failure. But realistically, when it's moving that much with that... I mean, look at the potential candle gap here. I've got to be realistic. You know, it's like, nah, I'm just going to take the scalp. I'll accept the fact that this first entry is going to be a loss. You know, like, okay, whatever, good enough. I don't really have a choice when I've got a candle that looks like that with that much separation. I love it for a scalp to the downside, which is all that was really. So, trying to go for more than that, this would make me a little concerned, you know. Incredibly strong rally to the upside. I mean, look at this thing. Sheesh. We've got the volume POC, which is down at the 44.30 quarters. There's not really a whole lot of news, no. If you're ever curious of what news is going on, go over to the oh, for God's sake, just go on there, you stupid anti-spam. Go on to the morning brief, and you'll be able to see all of those levels and in the news and all of that, and what you'd be looking for is right here. So the only news that we really have to worry about is inventories which I highlight both of them because this is yesterday's API, which helps for today. You get the idea. So. Let's see. 47 is where a lot of bulls would have bought in. 47 to 46 to 45. They're getting absolutely dumpstered right now if the bulls tried buying above that bull bar. Yikes. This is a potential major swing area, as a side note, for the NASDAQ as a reversal to the upside. This would be... Now, keep in mind, we still have a bear trend. So, low probability. But the reward versus risk here for a long is like a 6 or 7 to 1. I like these types of locations as an options play. So, on the NASDAQ, as an options area of interest, this definitely fits. It's a nice little zone of interest here for longs. Again, it's kind of on the it's on the cliff. If they lose their ground here, it's kind of game over. So we'll see. POC still hovering back at 44.30 quarter. The jeez, oh Pete. The S&P just went straight up. Support showing up at the open of the day. Maybe a lot of shorts trying to get the beginning of the day to go down, now realizing that they don't want it and jumping ship. Yeah, the POC down at the bottom, 30 quarter, that thing went, it's more than 5 to 1? Jeez. Big move. Got a relatively nice bear bar, but more importantly, we have monstrous candle gapping to the upside, at least for now, which is suggesting that the bulls should have the ability to reach out and grab up to the 51s or so. That is the candle gap objective. I like that more as a fade on the base. So S&P looking for scalpers underneath the last bear bar's low, with the assumption that those bears aren't necessarily... well, the sellers are going to try to trigger it in, but not as likely to be as supportive. And actually, given that we are in a range, I will give them the benefit of the doubt, because in doing so, that makes it so that the secondary offset is right on top of settlement. That's a lot more beneficial. Will the aggressive buyer add on their position for the long at the close of the red candle? It's, yeah, because there's still open candle gapping and everything is still saying, hey, there are reasons to be long. Let's say as an example, again, you know, 10s, just because 10s are easy. They bought 10 contracts on, not even the POC. Let's say that they wanted to get in above the bull bar a little bit later, right? So they buy the bull bar because they like the POC. Well, if that's the case, their stop's underneath the low, right? And along the way, obviously, they will have gotten... a 0.5 to 1, obviously, a 2 to 1 all the way to the upside. They've gotten their targets filled. So, you know, like 80% of the position's already off. When you start pulling back in this area, it's, oh, you know, I don't necessarily mind going, all right, I'll throw another one on there. Let's see if we can get that follow through. I'm not going to go ham and add another, you know, a full allotment, because that's going to totally jack my average, unless I have an incredible amount of faith in that location. I would rather build in and try to do my average a little bit better by, you know, building while it drops through a zone of support, knowing that that support zone is expected to hold, right? That's POC shifting to the upside, 44.43. reversing off the top of that previous resistance. And also, notice what's happening here. This is the same thing that happened last time. These candles are looking very similar. Couple minutes until 10 o'clock. No news until 10:30. Feel free to get those questions in. We'll rotate over into the extended session for members and VIPs and all that fun stuff. So far this morning, making it work. Had a attempted swing on the NASDAQ, which was a loss, which was expected, to be fair, and a scalp on the S&P. Looking across the board here, gold's not doing very well around that POC. They're having some trouble, especially if this candle closes down. Holy crap, look at crude oil. This thing looks like freaking Bitcoin. What is going on? Y'all might want to fill your tanks today, just saying. Jeez. Wow. Okay. Man, this thing is going absolutely bonkers. How's Shiba doing? Picked up a little bit more of that. Yeah, that's doing good. No, it's up another 2.4%. Yeah, baby. Not that I care about 2% on Shiba, but... Oh, man, I'm a real big fan of that coin lately. It's just outperforming all the other ones, and I'm finding it hilarious. It's the short-term plays, you know. S&P closing back above the previous POC. We have an inside bull bar, which doesn't necessarily prove anything, although I would love a little trap underneath the low of that. You would have my attention. And the bottom of that would be down right at the gap fill of the, or the test of the top of the gap, rather, of that area. That looks really nice. Sellers on the NASDAQ look like they're still trying to get a rotation to the downside. And the only reason I like the long side note for the S&P is because we've got like 4.5 minutes left. It still fits. NASDAQ is starting to look like the sellers are making a shot at the bottom, though. All right, we are at 10 o'clock. Get those last questions in. We'll transition on over to the extended session. Upside candle gap objective still open. Okay, they got down to 42, 3 ticks away. NASDAQ still looking like it's under pressure a little bit here. All right, not seeing any other questions or anything else going on, so that'll do it for the morning session. If I did miss any questions, feel free to drop them in the comments below, or if it's a more detailed question, you can always shoot me an email, jhb@ssftg.com. Otherwise, though, let's transition over to the extended session for VIPs and members, and we'll get rocking and rolling. If you need the link for that, it's in it'll be posted in Discord in just a minute. All right, so hang tight, and if you're ducking out, have a good one, and we will see you all tomorrow morning. All right, have a good one. Talk to y'all later. Thanks.